SoFi stock is up 22% today following better than expected earnings and better than expected full year guidance. We're going to look at what SoFi just said and discuss whether or not SoFi stock can go higher from here. On top of that, some things that can fuel a stock to rise after better than expected earnings are things like a short squeeze, potential investor sentiment around a stock, in which we'll look at both of those. And just for the cherry on top, I will show you guys my position in SoFi and what kind of stake I have in this company. Now, I've been a long-term investor in SoFi stock for a long time now, probably too long. So yeah, I'm still upside down on my position because unfortunately I did not, well, buy the dip as aggressively as I should have. I will let you know here in this video if I plan to buy more SoFi stock. Hit the like button as well as subscribe to the channel, and let's get started. First things first, SoFi hit a big milestone today, and it seems like every earnings from SoFi, they are killing it. So that makes me very encouraged as a long-term investor. Unfortunately, this market environment has not been kind to small and mid-cap stocks. Even small and mid-cap stocks that have been beating on earnings have been seeing massive growth. It's not like SoFi has done anything wrong, right? SoFi's been doing everything right. SoFi stock has went from $25 per share in 2021 down to a low of $4 and some change in 2023. And well, the business has been growing phenomenally the entire time without hiccups or anything. Like, you haven't even seen roadblocks. It's been nonstop gas pedal to the floor as far as SoFi's growth, and the stock has not been rewarded for it. That could soon be changing here, even coming on Wednesday, as I expect the Fed could announce an end to quantitative tightening. That indeed could help force part of this $6.2 trillion, a record by the way, sitting in money market funds, to put that money back into the markets. And what a more attractive place than SoFi to potentially deploy some fresh capital back into stocks. Now, as far as SoFi specifically, the fourth quarter brought a milestone for SoFi as the company delivered its first quarterly profit on a GAAP basis. SoFi posted fourth quarter net income of $48 million or 2 cents per share, whereas it generated a loss of $40 million or 5 cents a share in the year prior period. Analysts tracked by FactSet expected the company to break even on a per share basis. So SoFi swung to a $48 million net profit, whereas analysts were expecting basically a break-even quarter. So that is great news. Now, SoFi also reported adjusted earnings before interest, taxes, depreciation, and amortization, known as EBITDA, of $181 million, up from $70 million in the year before period. The FactSet's consensus was for $142 million, so SoFi easily beat that number as well. Total net revenue came in at $615 million, up 35% from a year prior. Analysts had been looking for $575 million, beat that by a long shot as well, up 35% year over year. And I don't even think that's the most impressive part. Origination volumes for personal loans were up 31%. Now, personal loans have become a much larger portion of SoFi's business, so 31% is still a very good number, all things considered. The most impressive part to me is that student loan originations or refinances were up 95% and home loans were up 193%. Now, that's pretty interesting because some of the latest data we have on student loans, well, not a lot of people are making their payments. Only about 60% of student loan borrowers have made payments when their bills restarted in October. So there's a lot of individuals that are looking at not being able to make their payment. Look at the cost of car insurance, of, you know, your mortgage has went up. This house that I'm in right now, the mortgage has went up about 20%. Although I haven't refinanced, I haven't done anything, because insurance costs have went up so much. Your escrow payments, they're way up. Just for an example, just imagine, not a lot of people are even able to make their payment, and 40% of individuals, well, did not. And why is that good news for SoFi? Well, SoFi, became popular because of student loan refinancing. Well, that business has basically been gone up until now, and it's starting to come back. Now, SoFi offers a very interesting way to refinance student loan debt as well, because SoFi will let individuals take, let's say, a 10-year or 15-year student loan repayment program, extend that to 20 or 30 years. So maybe they're obviously not lowering the principal amount, but they're lowering the monthly payment. And unfortunately for consumers, for average citizens of the United States, the system is indeed crooked, and, well, you cannot declare bankruptcy on student loans. So it's something you have to deal with, which is unfortunate to citizens, but good news for SoFi. Then when you're talking about home loans, I mean, there could be massive growth potential there as well. And SoFi has very much diversified. Now they're very much into personal finance, and SoFi is really good at cross-selling. So if you refinance your student loans, you're more likely to buy a home through SoFi. SoFi adding to their member base creates more opportunities for SoFi over the long term. I mean, when you start banking with SoFi, they really don't have a turnover rate. Their turnover rate is less than 1%. When you start with SoFi, you typically stick with SoFi for a long time. Now, SoFi also posted 19% growth in deposits during the fourth quarter alone to reach $18.6 billion. They say, as a result of this growth in high quality deposits, we have benefited from a lower cost of funding for our loans, said Anthony Noto in the press release, which he is the CEO of SoFi. SoFi noted that its investment products grew 20% from a year earlier before when excluding cryptocurrency, and the company is upbeat about having just adding alternative investments and mutual funds to its suite of offerings. Quote, with the launch of alts, alternative cryptos, SoFi is granting yet another opportunity for everyday investors to access investment opportunities traditionally reserved for institutional investors and the ultra wealthy, Noto said on the earnings call. The company expects to see $550 million to $560 million of adjusted net revenue in the first quarter, along with $110 to $120 million of adjusted EBITDA. Analysts were modeling $578 million in adjusted net revenue and $125 million in adjusted EBITDA. Management anticipates the company will continue to be profitable on a GAAP basis into the first quarter, calling for $10 to $20 million in GAAP net income, whereas the FactSet consensus was $8 million. So that's really why SoFi stock is likely up so much, is because analysts were expecting $8 million of continued net profits. They were actually expecting $0, around $0 for this latest quarter, and for next quarter to be slightly positive. SoFi said, yeah, we're going to be way higher than your estimates. For the full year, SoFi expects GAAP earnings per share of 7 to 8 cents, while analysts had been modeling 5 cents. SoFi also introduced a 2026 forecast, which calls for 55 to 80 cents in GAAP earnings per share. Quote, the announced fiscal 2024 guide and long-term guidance reflects continued growth across all business segments, Jefferies analyst John Hecht wrote. SoFi continues to navigate well in a somewhat challenging environment given the macro and rate environment. So, I mean, if SoFi is putting up these kind of numbers when Fed funds rates are at the highest they've been in 20 years, just imagine what SoFi is able to do once Fed fund rates do ultimately start to come down. As far as stock twits, SoFi is reading extremely bullish as far as sentiment. SoFi is actually the #1 trending stock here on Stock Twits today. Message volume is 100 at extremely high, and the participation ratio is also at 60, which is again extremely high for SoFi. Now, I do have quite a few shares in SoFi, so I do keep track of this, and these are some of the most bullish indicators that I have seen in a very long time. Option activity in SoFi stock today as well is pretty dang bullish from hedge fund and institutional investors. You have seen 88 orders totaling $8 million with a positive order value of 84%. Now, if we take a look at the short interest of SoFi, it is high. It is elevated, but it's not aggressively high. It's not extremely high. You do have 13.71% short interest of free float with about $934 million worth of short positions. Days to cover 2.66, 123 million shares that are currently sold short. Shares out on loan 135 million, and a short score of 66.02 out of 100. So it's not like we're looking at a massive potential short squeeze here, but if this positive investor sentiment does continue, mix that with hedge funds and institutions themselves going out buying bullish trades in SoFi, maybe starting new positions in SoFi as they're finally coming to the conclusion that maybe SoFi is really here to stay. Maybe the stock is significantly undervalued here, even at $9 per share. Then you add on top people that were betting against SoFi, potentially covering on some of those bets. And yeah, I think at least could see a continuation rally in SoFi stock. Now, if Wednesday you also do see an end to quantitative tightening and you do see money start to come back into our markets as potentially it no longer makes sense to keep your money in, let's say, a money market fund. Now, quantitative tightening is how the Fed is selling essentially $60 billion of treasuries every single month and $30 billion of mortgage-backed securities every single month. If you look at TLT, the reason TLT has fallen so much from your 2020, 2021 levels is because of quantitative tightening, due in part. Not the entirety of the reason, but part of it is the Fed selling these assets off their balance sheet. Well, that has caused TLT to fall. When TLT falls, treasury yields rise. When TLT rises, treasury yields fall. So if you're no longer seeing all this selling pressure in the treasury market, that means TLT most likely rises from here. That means treasury yields probably fall from here. That makes it less attractive to keep your money in something like a money market fund. And that could happen as soon as this upcoming Wednesday. You could see an announcement of an end to quantitative tightening. Now, let's take a look at my position here in SoFi. So on the day today, I'm up 18.64%. That is because SoFi is up that much currently. I'm up about $1,000 today, still down 27% overall, down about $2,400 still. Current market value, $6,345 per share. My average cost of $12.43. I averaged down way too soon and bought SoFi stock back in 2021 initially, and yeah, just averaged down way too soon. Should have taken that opportunity to average down when the stock was $4 per share, but I still do think SoFi is a very strong buying opportunity even when the stock is up 20% like it is today. I do have 700 shares of SoFi, portfolio diversity of about 11.74%. So a good deal of my portfolio is actually in SoFi stock, at least this portfolio. I have others that also have SoFi stock in it, so the total position I have is probably closer to about $10,000 or $12,000. But yeah, here in this portfolio, more so the public portfolio, decent positioning here, and I do plan on buying more SoFi stock really from now until $15 per share. I think about $15 per share, your risk reward does start to go down, but right now it does look very attractive buying SoFi stock. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.